The acquisition and disposal of a company, business, or assets is a strategic and significant event. And the success and failure of the event will largely depend on the team supporting the whole strategic process. I will cover here some of the key parties you might need to consider employing to help get involved in an end-to-end M&A transaction. Internal corporate team. Even for companies with a regular acquisition program and a sophisticated corporate development and corporate finance team, strategic transactions are significant and risky events. The dollars at stake in a strategic transaction tend to be huge. All this creates a powerful incentive for companies to employ external advisors instead of just relying on internal team. In the face of a risky and uncertain $500 million debt, who would not be willing to spend an extra $1 million or $2 million to provide some incremental comfort? Investment bankers. An investment banker has a role which includes identifying potential targets, preparing market materials, brokering initial conversations between parties, valuation, financial structuring and structuring of financing options for a transaction, and managing the sale process when advising clients on strategic transactions, such as M&A. Investment bankers are generally paid a percentage of the dollar value of the transaction. It is exceedingly important to note that in both cases, investment bankers are only paid if the transaction is successfully executed, while investment bankers are, on rare occasions, paid retainers or fees purely for advice. The vast majority of investment banking profits come from payments that are contingent on the success of the deal. As a result, investment bankers have a massive incentive to press for the successful conclusion of a strategic transaction. Lawyers. While most corporations have their own internal lawyers, these are usually supplemented by outside counsel. Why? Unless a company does a huge number of strategic transactions, inside lawyers usually will not have the same expertise that M&A and securities specialists at law firms will have. Outside counsel also provides peak manpower. Strategic transactions tend to create the need for a very large amount of legal work in a very short period of time. Auditors. In general terms, auditors provide two related assurances in a strategic transaction. First, they tell the buyer that the target's financial performance is as advertised. Second, they also provide assurances that the way it is described in the seller's books is the way it will impact the buyer's books once the seller is consolidated with the buyer. On the seller's side, the auditor's services are a prerequisite to making a company saleable and prepare financial statements in preparation for a sale. Regulators. Almost every business and financial transaction is regulated in some way by the government and/or the courts. Regulators could include Securities Exchange Commission (SEC), state and local regulations, industry regulators, international regulators. This is a key stakeholder that should also be kept in all parties' mind in ensuring a successful M&A transaction. Strategy consultants. Consultants are an often overlooked participant in the strategic transaction process. In part, this is so because they focus their energies on the earlier stages of the deal and are rarely involved in the final closing of a transaction. However, their impact on early strategic decision-making is amplified during the course of the deal process. Early work by consultants can change the target, general sector focus, or even the choice to do a deal at all.